So here's the good news. In 2025, there is no change to reporting requirements for payroll regarding the no tax on tips and the no tax on overtime. Sorry, I missed the quotation marks on the no tax on tips. Misnomer, it's a deduction. It's you're getting a portion of your tips might not be taxed, or a portion of your overtime might not be taxed, but still, we like to call it that anyway. But again, the good news is that there's no reporting changes in 25, so no changes to the W-2s, no changes to the 941s, 943s, and no changes for the 1099s. However, Treasury is encouraging employers, though, to provide this information to the employee so that way they can still claim the deduction on their returns, because they're still going to come and ask anyway, you know, what are my tips, they're going to start seeing this thing, the Treasury Tipped Occupation Code. Whoa, what's that? So you'll have to, they may come asking for that information, and next year that information will be required on the W-2s, especially for the tips. So again, like I said before, this is a deduction. Both of these are deductions. They are income tax deductions at the federal level, so the income is still subject to FICA, to FUTA, SUTA, and at this point in time, state and local. Highly doubt the state's going to do anything about changing their laws. So probably going to stick with this will be fully taxable at the state and local level as well. So kind of going into then 2026, now again, like mechanically speaking, it's not really going to change much at all. And from a taxable, like what's going to show up on the W-2s and what's going to show up at the end of the year. So box 1's still going to include the tips, it's still going to include the overtime. It's just now it's going to be reported down in box 12 as well with its own special fund codes. So it will just have to be tracked. But the way that employees can take advantage of it if they want to, they can get their income tax withholdings lowered, but they have to file a new W-4. So coming in 2026, right now there's a draft W-4 out there that the IRS hasn't finalized yet, but it does take into account in the worksheet section these extra deductions that were introduced by the OBBB. So that way employees can lower what's being withheld from their pay, assuming that they're then going to get the deduction when they turn around and file their 1040s. So I was going to talk about them a little bit more if you want me to keep going. So.
You're doing great.
Okay. All right. So for tips, the thing to worry about with the tips deduction, you do have to know whether or not you're an SSTB. And Robin was talking about SSTBs, and I'm like, yes, she talked about them, so now I don't have to explain them. So the specified service trader business, if you are in the field of a specified service trader business and you provide tips, unfortunately your employees do not get the deduction. Like that's something just to realize, that if you're in one of those fields, again, of health, law, accounting, actuarial sciences, performing arts, again, something where the business is it's a service or it's based off of your reputation or skill, then yeah, unfortunately we don't get the tips deduction for them. The other thing we have to know is the employee's Treasury Tipped Occupation Code. So the Treasury released regulation 1.224, excuse me, -1, which is currently in proposed form. It hasn't been finalized yet. But at the very back end of this is a list of industries that the Treasury, that the government has decided, these are tipped industries, this is where these are the employees who are allowed to take this deduction. So the broad categories of those are food and beverage service, entertainment and events, hospitality and guest services, home services, personal services, personal appearance and wellness, recreation and instruction, and transportation and delivery. So I would, if those words like kind of ring in your ear, like I think I have employees who are or even if you have tipped employees, I would recommend looking at the regs. I know I'm goodness gracious, I'm looking at regulations, but I would recommend seriously, like it's at the very back of it, it's at the very tail end of it. But just seeing like what's the job description, what is the IRS looking for in terms of who are these employees that are allowed to take this deduction, and who do we have to be tracking in terms of who's getting what tips. So again, just in case you want the regs, again, it's 1.224-1. So remember, tips do have to be compulsory and voluntary, so they have to be given free from the customer, has to have the choice to give them. So it can't be a baked-in number. So if you go to a restaurant, say for example, and you have like a gratuity there that says gratuity for more than 8 or more, that's not a tip in terms of for the definition of a qualified tip, because you are told you have to pay it. It has to be something that the customer themselves says, yeah, I'm going to give this extra bit to you for this service. So again, those tips have to be tracked and eventually reported on the W-2 at the end of the year. So moving then into overtime. Overtime is a bit more simple. So overtime, they're allowed a deduction for qualified overtime compensation. So what does that mean? Qualified overtime compensation is what is defined as overtime in the Fair Labor and Standards Act. So it's a federal definition of what is overtime. So it's the excess of the regular rate. So the half of time and a half is what they get as a deduction. So, and there's also, it's in excess of 40 hours. So if you pay overtime, not based off of 40 hours, but based off of like saying you work more than an 8-hour workday and you consider the 9 hours over a part of that is overtime. If the employee doesn't work over 40 hours in the week, that's not overtime for this. Does that make sense? That's a little confusing because you have to follow what is in the law for the Fair Labor and Standards Act. It can't be just whatever we're deciding to call overtime or whatever the state's calling overtime. So just to be aware of that. So, and overtime also does not include tips, so you can't, that way you can't, double dip. But overtime's a bit easier, however, you just have to make sure it's following that Fair Labor and Standards Act definition and not any other definition of overtime. So moving on to that, then one quick other part of, not payroll related, but not really, but information returns, 1099s. Everybody's favorite information returns that we always forget about, but still important to do at the end of the year. In 2025, there are no changes to the thresholds for 1099, so it's still at $600 for 1099 NECs and 1099 miscellaneous. If last year, if you got a 1099K out of nowhere, if you were like, oh my goodness, like what is this thing? I got this from PayPal, or someone gave me something through, one of those third party, and you got one of these 1099Ks, you're probably not going to get those this year. Those thresholds went up immediately back to where they were, which I think was, I don't know this one off the top of my head, either 2 or 6. But anyway, they're much, much higher, so more than likely you won't see those again this year. Thank goodness, because those were kind of a pain. In 2026 though, then the thresholds for the NEC and the miscellaneous also go up, so those are at 2,000. So now if you have someone that was at like that 600 level, and now you go up to the next year, if they're still at that 600, 700, somewhere in between, they don't have to be issued an NEC or miscellaneous. So, and that's going to be pegged to inflation. So each year, that's going to gradually move up. Now, the one other fun part about the NECs and the miscellaneous is that they also, the tips and the overtime deduction apply to them too. So if you, for some reason, if you tip someone who's an independent contractor, you do have to track that, because that will go on a box in the 1099 NEC. Now granted, they have to be in one of those industries, the beverage, food service, etc. Same with as your employees, but that can be there. And surprisingly, overtime is also applicable, but Treasury has to give us instruction on that, because right now that's pegged to the Fair Labor and Standards Act, and independent contractors aren't employees. That's the whole idea of an independent contractor. So how can you use, time and a half rate that we use for an employee to define what we're paying overtime to an independent contractor? So Treasury needs to give us more on that first yet. So unfortunately, we don't have an answer yet for that, but stay tuned. Hopefully we will before, next January.
You can see why we have Josh handling the payroll.